Let's talk about North America, a continent long dominated by the US with Canada and Mexico as the quieter neighbors. But now those neighbors have signed a $214 billion trade agreement, fundamentally redrawing the economic map. This isn't just about more avocados or maple syrup, it's a comprehensive pact integrating their economies from cars to tech to food. The message? Canada and Mexico are building new bridges, bypassing the US, and insulating themselves from its economic chaos. It's a bold move, signaling they're ready to control their own destinies. While the US picks fights, its neighbors are quietly forging one of the most significant trade alliances in recent memory. The implications are huge, affecting everything from car prices to global supply chains. The quiet roommates just made a $214 billion statement, and the continent will never be the same. Trade deals might sound boring at first glance, like something only politicians or economists would care about. But in reality, they're the invisible rules that make global commerce tick, shaping what you find on store shelves and how much you pay for it. At their core, trade deals are agreements between countries designed to make trading goods and services easier, faster and cheaper, usually by cutting tariffs, those pesky taxes slapped on imports that can drive up prices. Imagine you're in Canada and want to buy a bottle of authentic Mexican tequila. Thanks to a trade deal, that tequila can cross borders with fewer taxes and less hassle, making it more affordable and accessible for you, and opening up new markets for Mexican producers. But trade deals go beyond just slashing taxes. They also tackle the mountain of paperwork and regulations that can slow things down. By harmonizing rules and standards, they help goods move more smoothly and quickly from one country to another. The new deal between Canada and Mexico is all about clearing the path for business, making it easier for companies in both countries to work together, invest and grow. It's about building trust and creating opportunities on both sides of the border. What's really interesting is that Canada and Mexico are deliberately choosing to strengthen their partnership, even as the US, their usual trading partner, takes a back seat. They're rewiring their economic relationship, and that's a big deal. This isn't just another routine agreement, it's a strategic masterstroke, a move that could reshape the balance of power and influence in North America for years to come. So when you hear about this deal, think of it as more than just paperwork. It means fewer barriers, more business, and a major shift in North American priorities. And the timing? With global tensions and economic uncertainty, it couldn't be more crucial. The world's economic chessboard just got a bold new opening move, and everyone's watching to see what happens next. So what's inside this $214 billion deal? It's a blueprint to boost direct trade and cut out the US middleman. The focus streamlining customs, strengthening supply chains, and targeting 4 sectors: automotive, agriculture, technology, and energy. Now, car parts can go straight from Ontario to Monterey, and Canadian grain can reach Mexican tables with fewer tariffs. In tech and energy, it's about pairing Canadian innovation with Mexican manufacturing muscle. The goal? Build a North American powerhouse that can compete globally. By aligning standards, they're creating deeply intertwined industries. This isn't a quick fix, it's a structural shift, giving both countries more control over their economic futures. Canada and Mexico are writing a new chapter, one where they call the shots. Why are Canada and Mexico teaming up? Look south. The US is throwing a tariff tantrum. President Trump's administration has slapped high, unpredictable tariffs on allies, turning trade into a zero-sum game. In July 2025, the US threatened crippling tariffs on 14 key partners, including Canada, unless they caved to American demands. Even close allies like Canada face 25% tariffs, with negotiations tense and public. This isn't partnership, it's economic strong-arming. The Canada-Mexico Pact is a direct response, a defensive alliance against US volatility. When your biggest customer becomes unpredictable, you look for new partners. This deal is economic insurance, a clear signal that the world won't just wait for the tantrum to end. Instead, they're making other plans. The US may be the loudest roommate, but it's no longer the only one with options. The US tariff policy isn't just about angry letters or heated debates in Congress, it's a decision that's sending shockwaves through the entire global economy, creating a ripple effect that touches nearly every corner of the world. High, arbitrary tariffs create massive uncertainty, and markets hate uncertainty. When governments suddenly change the rules of international trade, investors and businesses are left scrambling to predict what comes next. Stock markets tumble, investors pull back, and consumers worry about rising prices. The fear of the unknown can be just as damaging as the tariffs themselves, leading to panic selling and a freeze on new investments. Tariffs get passed on to shoppers, your TV, your shoes, your car parts all get more expensive. Everyday essentials and big-ticket items alike see price hikes, squeezing household budgets and forcing families to make tough choices. Companies scramble to rebuild supply chains, facing tough choices, absorb costs, raise prices, or find new suppliers. For many businesses, this means rethinking long-standing partnerships and investing in new logistics, which can take months or even years to stabilize. The US has even threatened extra tariffs on countries aligning with the BRICS bloc, turning trade into a geopolitical weapon. This isn't just about economics anymore. It's about power, alliances, and influence on the world stage. This risks splitting the world into rival economic camps, undoing decades of integration. The global marketplace, once built on cooperation and open borders, now faces the threat of fragmentation and isolation. The result? A turbulent global economy, with Canada and Mexico building their own, more stable raft. As uncertainty grows, these countries are working together to shield themselves from the storm, forging new agreements and strengthening regional ties. The US may have thrown the first wrench, but its neighbors are already finding ways to keep the machine running. Innovation, collaboration, and resilience are helping them adapt to the new reality. The world is watching and adapting. From boardrooms to living rooms, people everywhere are rethinking how they do business, what they buy, and who they trust. The trade game has changed, and everyone is learning the new rules as they go. North American trade used to be a lopsided triangle, with the US at the center. The new Canada-Mexico deal changes that, creating a direct, powerful axis between the two. Now, Mexican companies look to Toronto, and Canadian manufacturers look to Querétaro, bypassing the US. This is a conscious shift, challenging America's role as the indispensable partner. If the deal works, trade and investment will flow along this new corridor, not through the US. Canada and Mexico are moving from junior partners to equals, building resilience and asserting sovereignty. The old sitcom dynamic is over. The quiet roommates are building their own wing. The North American relationship status? It's complicated. And the balance of power is shifting. What does this mean for American companies? Trouble. US exporters, once the default choice in Canada and Mexico, now face stiffer competition. Canadian and Mexican firms can trade tariff-free, while American products risk new taxes and red tape. Imagine a Mexican factory choosing a Canadian supplier over an American one simply because it's cheaper and easier. This isn't just about lost sales, it's about losing market share and influence. Once new supply chains are built, they're hard to break. Ironically, US tariffs meant to protect American jobs may end up hurting them. American exporters are now at a disadvantage, caught in the crossfire of their own government's trade war. The playing field has tilted, and not in America's favor. Sometimes the biggest threat comes from your own side. Canada isn't just looking south, it's looking east too. As global dynamics shift, Canadian leaders are reimagining the country's place in the world, seeking new opportunities beyond their traditional partners. With the US unpredictable, Canada is expanding trade with China, the world's second-largest economy. This pivot is more than a backup plan, it's a strategic move to tap into Asia's booming markets and growing middle class. As US-China tensions rise, China seeks new suppliers, and Canada is ready to fill the gap, especially in agriculture and energy. Canadian wheat, canola, and natural gas are increasingly in demand, opening doors for exporters and farmers alike. Canadian farmers and energy producers are stepping in where American ones once dominated. This shift is creating new jobs at home and strengthening rural communities, while also building long-term relationships with Asian buyers. This diversification makes Canada's economy more resilient and gives it leverage in US negotiations. By spreading its economic interests, Canada can better weather global storms and avoid being caught off guard by sudden policy changes. If Canada secures a stable US deal while others face tariffs, it could become a gateway for global companies into America. International firms may choose Canada as their North American base, boosting investment and innovation. It's a high-stakes, high-reward strategy. Canada is playing on multiple fronts. The risks are real, but so are the potential rewards as Canada positions itself as a bridge between East and West. By not putting all its eggs in the American basket, Canada protects itself from shocks. This approach encourages innovation, supports a wider range of industries, and helps ensure long-term prosperity. The result? More options, more power, and a stronger negotiating hand. Canada's leaders are betting that a diversified approach will keep the country competitive in a rapidly changing world. In a world of shifting alliances, Canada is keeping its doors, and its trade routes, wide open. The country is investing in infrastructure and building new partnerships to stay ahead of the curve. The game is global, and Canada is ready to play. With eyes on the horizon and a strategy for the future, Canada is charting its own course in the world economy. So, where does this leave us? North America's economic deck is being reshuffled, with global consequences. The era of unquestioned U.S. dominance is over. The Canada-Mexico Pact is a symbol of this new reality. It's a strategic alliance for stability in an unstable world, born from U.S. unpredictability. By treating trade as a battlefield, the U.S. has pushed its closest allies to forge new paths. Canada and Mexico are building a system to withstand future crises, not just today's. American businesses now face new, tariff-free competition in their top export markets. Meanwhile, Canada is expanding east, hedging its bets and strengthening its hand. The continent is moving toward a more balanced, multipolar system. The lesson? Alliances require care, and when a dominant power acts erratically, partners make other plans. The quiet roommates are quiet no longer, and the whole neighborhood is about to change.